Good morning, traders. It is Friday, July 28th. We're about 90 minutes before the open. Futures looking a little bit higher this morning. Every one of these videos starts with a review of our previous pick. I want you to see how consistent this trading system is. It can be learned and replicated. So let's go through the process. We'll take a look at that pick. Then we're going to do some market analysis. We'll get our bearings, market first. Then we're going to find a new pick, and I'll give you exact instructions on how you should approach that trade. JNJ was the last pick of the day. Sorry, I was not able to get a video out Wednesday. We had the FOMC meeting, so didn't really know what the reaction would be to that. So a little delayed getting this video out on Friday. I'll try and do 2 videos next week, though. In any event, J&J was the stock that I'd highlighted. Loved the breakout. So first, we're going to go into a D1 chart and see what had me so excited. I loved this horizontal breakout. We'll put up our trend line so you can see where they come into play. Multiple horizontal trend lines that were breached. Stock rallies up, earnings before the open, closes on its high. Loved this breakout, and that was in the midst of some market weakness, which told me that the stock was really strong. That's how we know the institutions are involved. So my instructions were to buy the stock on a dip when LRSI H1 dipped below 20 and then rallied above 20. So we're going to take a look at that right now and we'll see how it did. But I love this horizontal breakout here. Stock was above all the major moving averages, so let's put those up real quick. You'll see where they come into play. Stock had broken through all of these, but it is herky-jerky, so we can expect a pullback. How the stock pulls back is very important because if it starts giving back gains easily, ka-chunk, 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 ka-chunk on heavy volume, then we know it's profit taking and that this move was a head fake. If on the other hand, the retracement is very stubborn, mixed overlapping candles, light volume, it tells us that buyers are engaged and that this baby is going higher. So let's take some of these studies off so that we can clear up the chart, and we'll take the major moving averages off, and let's go into that 1 hour chart. So this is the 1 hour chart on J&J, and you can see right here, LRSI, on this move, the stock continued to push higher. We wanted to buy a dip. That's the mentality that you should be in right now. So you can see how LRSI drops below 80, then goes below 20, and then here, July 25th at 2 o'clock, you can see the reading was 0.33, greater than 0.2. So I got a trade alert. So we'll go up here, we'll take a look at what that price was on July 25th. There's the 2 o'clock bar, so let's assume that we get the alert and we can buy the open of the next bar. We should be able to. It's a 1 hour bar. So the open is around 171.50, and you can see how the stock is about $2 higher. Really nice entry point. Well, what does this good entry point do for us? It does a few things because we can see that this pullback that the stock had was chunky, mixed overlapping candles, nothing organized. If sellers were in there taking profits and they wanted to get out while the going was good, you would see a long red candle like this and then another, and you would give up more than half of this long green candle and the breakout. Well, if you saw that type of price action, you wouldn't want to take the trade. But we had the LRSI cross. I'd mentioned the price action that we were looking for. By all means, please go back and watch the previous video. It had tons of great information, and you can confirm that these exact instructions were provided. In any event, we get this mixed overlapping retracement, and then we get a nice bullish hammer. We got our cross in here, did not retrace very far. That tells us that buyers are super anxious to get in there. Now here's the other tell. You can see how the stock retained its relative strength. That means that versus the S&P 500, This stock is holding up well. That's how we know the institutions are in there. Look at the volume. Volume, blue line above zero, also better than average. So we're marking check boxes. This is a good trade. So let's take a look and see what the market did. I'm going to overlay the S&P 500 so that you can see market really didn't do much while the stock was floating higher. And look what the market did yesterday. Yesterday we had a nasty gap reversal. We're going to get into the market next. Market sold off hard. What did J&J do? Huh, preserved its bid very nicely. Folks, this stock is going higher. So you got a nice entry point in here. You got a couple dollars worth of profit in the trade. Do I need to bail on it right now? Well, that really depends on what your time horizon is. If you're a longer term swing trader, then you can have your stop at your entry point, $2 lower. S&P is going to be up about 20 points on the open today, so the stock should benefit. We want to see that stock pushing higher today. That would confirm relative strength in it, but a lot of the emotion has been removed from the trade because you're in at a good price, because you bought that dip. So that makes the trade much easier to manage when you already have a profit in it. You can weather some of those squalls that the market's going to throw at you. So let's go in, let's take a look at the market. I still like J&J. I think this stock is going to continue to move higher. So what did the market do? Well, this is the price action yesterday. When we get a gap up to a new relative high, those are very often faded. And so what we had initially was we had pretty flat trading. They're trying to preserve this bid, trying to preserve it, and then eventually we make a new low of the day. We also had a bearish 1OP cross. So you would not come in and chase this gap higher. If you had overnight longs, you should be taking profits on those swing trades, because the market's been going 3 steps forwards, 2 steps backwards, 3 steps forward, 2 steps backwards. We would not come in and just expect that go gangbusters, something miraculous happened overnight and that the market is just going to zoom higher. No, we're going to see some profit taking. And so you can see how the market pulls back. It forms this double bottom low right in here. Yes, you could have bought this on support, especially when the market started to clear this level. So if you're in here, that's not a bad trade to take. You had a bullish 1OP cross. You had decent volume. The prior day's high was preserved pretty substantially. So yeah, this is all good. But when the market starts to roll over in here, now you're not seeing that follow through, because this is where you'd want to see that test of the high very, very quickly. Long green candle, long green candle. Now we get through with a long green candle. That's the price action as a bull that you would want to be seeing. Well, we don't get that. We barely get off the low, and now we start compressing with these tiny candles. That tells you that sellers are nearby. Selling, 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 selling. They're keeping a lid on the action. If buyers were the aggressors, they would be able to lift all of these offers, and that's when you start stacking green candles on heavy volume. So this has you a little concerned because, you're long in here. You've got an okay entry point with a little bit of cushion in the trade, but as soon as you start to give that up, you have to start thinking, okay, the chances of a gap reversal are pretty heavy. So now you take a little bit of a loss on the trade. If you're a very short-term trader, if you're a pro, you can short this market. And what are the clues that you look for? Well, when we have a new low of the day with a key bar right here, long candle, much bigger range than normal, closing near its low of the range. By definition, that's a key bar. That gets your attention because we're making a new low of the day, and we have a bearish 1OP cross, and we have extremely heavy volume. Okay, guess what? Right here, now you can short. Might have lost a little bit of money in here or scratch the trade. This is where you're going to make some money. But as I've been mentioning to all of you, you're going to drive yourself crazy if you try and short this market, because we're in a bullish trend right now. The trend is your friend. That's the side that you need to focus on. Now, if you're a pro, you can short this, but you're going to also know, hey, I better cover this thing. I'm going to have some really nice gains in here because as I take the short, I know I'm trading against the market. Now I have confirmation. I can add to the position. Okay, we're not able to get any decent bounces in here. 1OP is continuing to fall hard. Okay, I can add a little bit right in here. Okay, I've got confirmation. I'm starting to fall a little bit, but I got to be careful in here. So I'm going to keep my stop fairly tight because I've got a bullish 1OP cycle forming here. And now you start to see about 20 minutes of that cycle unfold without any kind of bullish market price action. You can also add in here. You continue to ride that trade down. Again, you got to be a little bit more passive. You have to be a lot more passive on the short side. So I would not have been aggressively adding. I know I'm on the wrong side of the market. I know I got to pull the plug on this trade quickly because it's just a matter of time until buyers come back. But yes, I could trade this. For most of you who are still finding your way, who are trying to learn how to trade, shorting is going to be very difficult for you in here because you're going to get short here. And then when you see the market close on the low, you're going to go, oh my God, my shorts are doing so well. Maybe the S&P 500 will open 20 or 30 points lower tomorrow and I'll be able to make a killing. And you don't pull the plug. And then the next day, the S&P futures open 20 points higher. Now you're stuck. So you cannot overstay your welcome on the short side. Now let's shift gears and take a look at what we got cooking on the D1 chart. And here you can see that we've had a gradual drift higher, a compression, and a very long bearish engulfing candle. Open on the high, close on the low. Am I super spooked by this right now? Not really. I've got to see some follow through. Most definitely, I would not be shorting this market on a swing basis. One day does not make a trend. And today, we're going to open halfway into this long red candle. For me, this is probably a lot of program trading. Once the momentum was established, they knew that they could fill the gap, and that's why the market closed on the low. So not overly concerned with this unless we open higher today, 20 S&P points higher, and then the whole day we spend drifting lower and we close well below the low from yesterday. That would get my attention because that would tell me that profit taking is very persistent. But until then, let's zoom out a little bit. And let's take a look at the major trend line that we've got right in here. And it comes all the way up to this horizontal resistance level. That's around the $420 price point. We have another trend line that comes into play here. And that takes us up to about the 442 level. You can see this horizontal was resistance, now support, a little bit of a cup and handle in here. That 442 level, until I see a convincing close below it, I'm going to stick with the long side. Now we are getting into some seasonal weakness. That typically starts to show up mid-August to late August, maybe even early September. So I still think we've got a few good weeks of bullish price action. It's just that the market got a little bit ahead of itself. You can see there's a compression, a nice little rally up, start pushing higher, and there's your retracement. We've got this pattern that I had been mentioning to you where you've got 3 steps forward, 2 steps back, 3 forward, 2 back. That's what you're going to see. And the way to approach that type of market pattern is to wait for those dips. That's when you are a buyer, when you have that support. And on that dip, you're making sure that nothing gets too organized. You don't want to see consecutive stacked red candles closing on their low on heavy volume, mixed overlapping candles on light volume. That's okay. That tells us that just some normal profit taking and that dip is going to be a good buy. And then you get this lift off in here. You get this Nice rally in here. Well, you want to start taking some gains, and now you get a red candle. All right, getting a little toppy. Take your profits in here. Wait for the dip. Okay, mixed overlapping candles. Light volume. This is going to be a good dip. I want to buy it. Long-term uptrend still intact. Major moving averages still intact. So then you get your lift off. Okay, well now we're compressing here at a prior horizontal resistance level. Take your gains. Now you get that dip again. Okay, this is nothing too daunting here. We're making a higher low. Okay, in here, when I start seeing this after a pause, I know that buyers have been aggressive. That's why we're in an uptrend. So yeah, I could start getting long in here. Now I get lift off again and start compressing. Take your gains here. Wait for the next dip. It's very likely that the sellers that were there yesterday taking profits are going to be back. So I'm not looking for the gap up today to just take out the open from yesterday and blow right through it. We're probably going to see a little bit of a drift lower over the course of the next few days. The news coming out next week, we've got Apple earnings next week. That'll be the last of the mega cap tech companies. Earnings season is in full bloom, so we're getting lots of information from companies. In general, they've been quite good. Next Friday, we get the unemployment report. Not looking for anything major there, just kind of watching the wage component. The initial jobless claims have been coming in very low, which is good for the economy. So I think the number yesterday was 210,000. That is a low number. So over the course of the last 4 weeks, those initial jobless claims numbers have been excellent. So we should get a nice, robust jobs report next Friday. So I don't believe that that's going to be a speed bump for the market either. But what happens when the Fed goes into recess, which we won't hear from them for about 6 weeks or so, is everyone starts wondering, okay, are they going to hike 25 basis points in September? We don't really know what's going on. We don't hear anything from them. Everybody gets nervous when nobody's minding the shop. Shorts tend to be very passive ahead of mega tech earnings, because those have been the stocks that have been leading the market rally. So why would I want to be shorting before they announce their earnings? I'm not going to. But as you start getting toward the back half of August, all of those earnings releases are out and the air gets let out of the balloon. And so that's why we start to see some seasonal weakness. The one thing you can also expect is that everyone is starting to take their vacations before the kids go back to school. So August is a great time to take time away and to get your vacations in because the volume drops off. Typically, we start to see compressions, price compressions, very narrow trading ranges throughout the course of the day, low probability trading environment. And so that has to be factored into your trading game plan. So, bottom line, what's Pete expecting to happen here? I think that we're going to see a little bit of follow through weakness. I'm not looking for any long red candles in here. So, if you're thinking bearish engulfing candle, warning, warning, warning. It's finally time to start shorting. No, it's still way too early to short. But this is a warning sign. So if we get a little bit of a drift lower and then another attempt at this high, and we have a lower high double top, that will tell you that we're probably going to see further retracement, perhaps towards the end of August. So those are the things that you'll be wanting to watch for. So you get follow through selling and a half-hearted attempt to get back to this prior high, and then a lower high double top. And then you're going to get more substantial selling. Let me show you a chart that depicts that exactly. That's one scenario. Another scenario would be that the market starts to recover this candle here, and that yes, this was all just program driven. Everything still looks good. The economy still looks good. Stocks are maybe a little bit ahead of themselves, but we start to recover this and then just kind of float higher for a few more weeks. That I think is also very possible, but this is kind of a warning sign in there if it persists. And if we can't take out that high in the next couple of weeks, then I think that resistance starts to become much more legitimate. Let's go into a 5-minute chart because I want to demonstrate what's going on here, and we'll be able to see that in the price action. That was the FOMC reaction, run up, run down, no real net effect. But we did have a nice example of what I'm looking for price action. You can see how this trend line here, we poke through it, and once that upper trend line, that's a high plus trend line, gets breached, then you have to start thinking, okay, we could see a buying climax in here because we've broken through that upper trend line. Long red candle, bearish engulfing candle. Ooh, where have I heard that before? Yeah, this is what the market put in. So now this next candle can't even get through the halfway point of this long red candle. It tells you that sellers don't believe that it's going to be able to get back to the high of the day, and they're not going to wait. Whap, 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 whap. They're in here selling pretty aggressively. Then you get your next long red candle very quickly after. And this is an important candle because it can't challenge the high. So on a micro basis, this is kind of the topping formation that you will get off of a long red candle like that that comes on a relative high. And so now you start seeing some of that follow through selling pressure, and then you get your gap down. And we eventually did bounce and actually started to run higher. So this kind of follow through, yeah, I would expect that the sellers are not just going to go away. We're going to get a nice little gap up, and then what happens the rest of the day will be very, very important. So we'll want to make sure, I think we're going to gap up about 20 points, which puts us right about in this level here, which is pretty close to the close that we had on Wednesday. And so, yeah, we get back to this level in here. We want to be able to preserve this bounce for most of the day. We don't want to see a lot of follow through. We come down, we test this low, bounce off of it. That's okay. The next few days, we kind of move sideways. That's okay as well because we're consolidating. Strong stocks are going to be able to weather that type of storm. So that's what we want to be looking for, the J&Js of the world. So J&J held up very well. We're going to be looking for stocks right now. We're going to go into a search, getting a little bit long in the tooth here on the commentary. So I'm going to cut to the quick. We're going to go to strong after earnings. This is earnings season, and we should try and take advantage of companies that have had a strong earnings reaction. So we're going to go through this list and take a look at some of these stocks. Well, I'm going to be instantly drawn to stocks that have lots of green dots and that have had a good earnings reaction over the course of the last 2 weeks and that have heavy volume. Heavy volume is a key ingredient. And so you can see a few of them, and we're going to click through some of these and see what's of interest. IBM, we'll take a look at that daily chart, see what it's doing. There you can see it's got some multiple breakouts. It's been able to get through this horizontal resistance. This was nice price action yesterday. Look at that gap higher, and it preserves all of those gains. So IBM could be on my list, but right now, given that I'm looking for a little bit of softness towards the back half of August, what I would prefer to do is I'm really more interested in a stock that's just kind of starting to get it going, not one that is breaking out to a new relative high. So I'm going to keep going down the list. J&J we can see is on the list. 3M is on the list, so let's take a look at that. Okay, so this has a higher low double bottom, nice upward sloping trend line, very choppy stock. When you look at a chart like this, the first thing in your mind should be, I'm going to have a second chance to buy that because it retraces all the time. You see that? I'm going to have lots of chances to buy 3M. Is it because it is as choppy as heck? I do not need to be in here chasing breakouts. But when the stock pulls back in the fashion that I've mentioned to you, mixed overlapping candles, light volume, then I know the selling pressure is not that great, and that when the stock does find support, it's going to stage its next leg higher. And so you can see this was earnings before the open on the 25th. Then we had really nice follow through with the stock closing on its high. And then yesterday with that market gap reversal, yeah, it eventually gave in and closed near its low of the day, but it's been able to preserve a lot of these gains. Let's zoom out, see what that longer term chart looks like. These are our automated trend lines. So we've got a really nice trend line breach right here. You can see that point connects to that point. This is a considerable breakout, and we've got some decent support forming here. So there's a rotation into industrial stocks right now. We had news earlier this week that China was going to have monetary and fiscal stimulus. Well, China's a big consumer of these chemical types of products, so that should bode well for industrial stocks, for cyclical stocks, and they're just starting to get going. So they're not too frothy. So any pullback that we might have is likely to be fairly small because a lot of that selling pressure has already been worked off in the stock, and now you're actually starting to see some buyers come in. Horizontal breakout right here, very nice. So let's take a look at the 5-minute action yesterday, and we'll zoom in so we can get a better look. And there you can see when the market selling pressure finally did take hold later in the day, yes, the stock pulled back, but not dramatically. So what we're going to be doing here is looking for that same H1 LRSI pattern, and we're going to set an alert on it. The beauty of alerts is it doesn't cost you a penny. There is no emotional attachment to the trade because you don't have a position. You don't have to monitor the stock and the position. You just have to set an alert. And when you get the alert, you reevaluate. And you take a look at 3M and you go, hey, they didn't have those long, stacked, consecutive red candles on heavy volume. We had a wimpy little overlapping pullback, and it was mainly caused because of the market decline. So buyers are still in there liking the stock. Buyers are supporting it, and we can see the relative strength. And why does that whole relative strength thing exist anyway? Because large institutions, asset managers, the guys that we want to follow, they don't care that the market is down today. They're looking a year out. They're looking 2 years out. Will 3M be higher in 2 years than it is right now? If the answer is yes, they're buying regardless of what the market is currently doing. Yes, there will be some basket trading because the stock is in the S&P 500, there will be sell programs that are kind of weighing on the stock when the market goes down. And that's why you will see some selling pressure in it, but on a relative basis, it's retaining its strength. So I like 3M. I think 3M is going to be my pick of the day. And we're going to right click and we're going to create an alert. And I'm going to go into LRSI. This is all on Option Stalker Pro, by the way. And I'm going to select the H1 time frame. And we can see that currently LRSI is at 80 and it's falling. We need it to go below 20, and then I want it to go above 20. So when I set this value at 20, we used to have a box that you would have to mark because it's above 20 currently. We needed to go false and then true. Well, we just improved the user interface so that we no longer have to do that. So here's the instruction. Give me an alert when LRSI H1 is greater than 20. The system will know what the current value is. The system will know that it has to go false and true, so I don't have any other box that I need to mark. I click Save, And now I can go do this with every other stock that I might like in my list that sets up well. Hey, IBM really performed well yesterday. Why don't I go in? I'm going to create an alert. I'm going to use the same type of principle, and I'm going to select that H1 time frame, enter 20. It's got to be above 20. Save that alert. Now I have that alert working. We'll take a look at two more stocks. I like that 3M trade because the stock has not lifted off. It has not gone parabolic. This is chunky and choppy as all get out. You can't trade this. You see a chart like this, just get to the next one as soon as you can. Boeing, we call this devil spawn because the stock is so difficult to predict. I do like this horizontal breakout here. Let's take a look at that chart. We'll zoom out. Very choppy stock. Compressing, compressing, compressing. This is a nice breakout. You know, if Boeing pulled back in a very wimpy fashion with those mixed overlapping candles and it held the bid well, then yeah, I could see it getting an alert and possibly trading it. So we're going to go in, LRSI, greater than 20. We'll use that H1 basis. This is a choppy stock. And now I have it working. When I get the alert, no action required on my part. It's simply telling me, remember, you thought this stock looked really good a day ago or 2 days ago? Remember, we're trying to buy these strong stocks that are making big breakouts on heavy volume. We're trying to find these stocks that have had a positive earnings reaction. Well, this stock had all the ingredients, and given our desire to buy dips, this stock has dipped, it's found support, it's getting going. Take a look at me. I'm worthy of that look. Then you check to see what that pullback looked like. If you're not seeing those stacked red candles on heavy volume, you can be very confident that buyers are in there. You enter the trade well, the stock pushes higher almost instantly, giving you cushion. Now, if you had to exit the trade, you can put your stop at your entry price and scratch the trade, or you can ride it higher. That's how we trade. This is the systematic approach that we teach. I hope you've enjoyed this video. Please leave your comments, share your thoughts. I'll make sure to reply. I might be able to do a video this Sunday. I'll get 2 videos out for sure next week. Thanks so much for watching, everyone. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.